Well, aloha everyone. Joshua Hayes at BigWaveTrading.com. The stock market ended the past week on a very positive note. The Nasdaq and the Nasdaq 100 are hitting new all-time highs. Volume expanded on the Nasdaq 100 in each of the last 4 sessions of the week. On the NASDAQ, you can see the exact same thing. So that's some pretty good confirmation. It's not extremely strong accumulation, but it's accumulation nonetheless, and it was on higher volume. The New York Stock Exchange, even though you can't see the volume here on Telechart, it was higher than the session before. So while it's not completely convincing, it's convincing nonetheless. I don't have the New York Stock Exchange advanced decline line, but it's confirming the move. It's moving higher. And in a very interesting note here, we can see with the S&P 500 is that I can't show you the New York Stock Exchange, but it's on stockcharts.com if you want to go see it. But you can see it was building lower lows before it hit the short-term higher highs, even better than the S&P 500 was. So that was kind of a sign that things might be okay. But looking at the indexes still, you can see the S&P 500 is still range bound in between two different levels. It still has not broken out above that level, 278.92, 278.87 close. So technically it's still a range-bound market. The Russell 2000 is above its first short-term resistance level, coming up on its second term. I assume all of these are going to break through. The Dow Jones Industrial Average is the weakest performing one right now, but that's perfect. That's kind of how you want it. Before, the Dow Jones Industrial Average was leading us higher. That's the exact opposite of what you want to see in a healthy market. So it's good to have tech and the small caps leading the way this time around. And if all, those two index, if the Russell 2000 index breaks out, you can be sure the S&P 500 and Dow Jones Industrial Average will follow. Please read the new positions commentary. I make it quite crystal clear why this market is probably going to move higher and will continue to move higher, and dips will continue to need to be bought until the yield curve inverts. I will get cautious and be extremely cautious anytime we start to sell off like this. But remember, at some point, I'm always looking for a low to buy until the yield curve inverts. There's only one area to go with the low interest rates, and that's the stock market. Now, they got overheated in the short term here, where you could get higher yields on bonds than the Dow Jones or the S&P 500. The dividend yield was actually lower than bonds, but it's come into line now with more strong earnings, the recent pullback, the price earnings ratios coming in. So just keep all of that in mind. I will always be cautious and always concerned about the downside, and will always protect the downside, and will always raise my stops and keep them tight when price action like this occurs. But I will always also be hunting for a low, and I will not be scared to piecemeal long positions. So whenever the NASDAQ and NASDAQ 100 does break out to new highs, I'm not sitting there going, oh my God, I should have been buying those crappy, decent, not crappy signals, that's being a bit extreme, but those good signals, waiting for the great signals, not taking the great signals because there are none, not taking the good signals because they're not great signals, and next thing you know, the market's hitting new highs and you're ill positioned. Instead, I'm basically fully invested. I only have a little bit of cash on hand if all of those long orders that we're about to go through fill on Monday. And with that being said, unfortunately, this past week, I got a couple of emails and comments from individuals that didn't follow hard rule number 2. Hard rule number 1 is always cutting losses short. If you go long something, it doesn't work, that's it, get out. Do not argue with it, because the next thing you know, you'll be in a falling knife situation. You won't be able to recover, you'll be paralyzed. And remember, it gets worse and worse. If you lose 10%, you only need 11% gain to get back to even. If you lose 50%, you need 100% gain. So the more you lose on the downside, the more it takes to recover. And once you're at a 60% loss, you're going to need almost a 200% gain to get back. It just gets worse and worse and worse the more you let your account fall. So always cut those losses short, and also position size accordingly. Rule number 2 is never ever chase. I never chase. Guys, every time I post new positions, I tell you the limit price I'm paying for. You can front run me. I update this website before I enter the orders on my end. So if I say that QUAD is a limit order at 26.63. That's what I'm paying. I'm not going to wake up the next day and decide, oh, the hell with it, I'm paying 26.77 for this one. No, guys, if I post 26.63, it's 26.63. There's no oscillating or deciding that it's going to be a different number than what I post. That means if you read my new positions page before me, you enter your good till cancel buy limit orders before me, you can front run me. You can front run me all day long. There was a recent long position. While it has failed for me, it's come back. I didn't get filled while a member got filled. We had the exact same limit order. I believe it the day that USAK was along. That was something like the low a day. I can't quite remember where it was at here. But there was an incident where at the morning, I mean, it probably came back 26.31. So it would have been USAK. So earlier in the day, USAK, it opened up at my limit price of 26.31, but it ran immediately in the morning. I didn't get filled, but I know for a fact a member did at the low of the day. That means that his order was ahead of mine, and that's what I allow you to do on my site. So if I say, for instance, on ZFGN that my limit order is 826, when you see it gap up to 9, you know 100% for a fact my limit order is still 826, and I will not be filled until it touches 826. When ZFGN gapped up that morning, there's no way in hell I thought it would actually back and fill my limit order, or else I definitely would have taken it off the books. But near the end of the day, it filled. I immediately, before the close, moved my final cut loss level to something like 792, 793, and I was completely knocked out of the position for right around a 4.5% loss. But I know somebody that took quite a large hit, and that's from chasing. You never, ever, ever chase. There's a good example. This happened back in 2007. I will never forget this. I think it was right here, EBIX. I issued EBIX as a long signal. Look at how thin this stock is. The breakout, back then I could chase breakouts like this. I could buy breakouts like this and it would work. Well, look at this one, 352 the close. That means that was my limit order. Look at where it opened, 608, almost 100% higher. Well, some people use market orders. They got filled up there. I didn't get filled. My limit order remained at 352. I got filled on 419, and watch what happens. I got cut out of some, but I was still in some. And just look at what EBIX does after that. Continuous trend higher. Look at that. Pretty crazy. That's when I was knocked out. But even from there to there, let's get back even further. There's the gap up. From my fill to this high here, that's a 267% gain in over a year, while others lost nearly 100% chasing that market order. So always position size correctly, never chase, and if you do chase, cut your losses immediately. Cut your losses immediately no matter what. And one of the things that can help you not chasing is by taking only perfect signals. Those are signals that are in liquid stocks, high price stocks, not extended stocks, stocks that are near their 10, 20, 50, 200-day moving averages. And if you stick to that, you're not going to have any new long signals. I don't have time to go over all the prices, but once again, all my good to cancel buy limit orders are on the new positions page. All my good to cancel sell stop levels are on the new positions page. There's nothing left to the imagination. It's all there black and white. But if you're going long, QUAD, this is an ex-canceling quality stock, but it's extended from its 20-day moving average. Well, I can't press the right buttons. It's extended from its 20-day moving average. It's extended from its 50 and 200-day moving average. If you're a new trader and you do not have a lot of experience and or you do not have a history of making money in the stock market, you don't take QUAD. Or if you do, you only use this one stop level, or maybe use one here and one here. But either way, things must be tighter and more risk controlled. Risk needs to be the number one concern. But quad's no good. It's extended, so you pass. ESRX, that's a nice chart. It looks like it's an earnings winner, but it's not. It's being bought out by Cigna. Cigna's buying it, so I'm going to be using only the support level. I'm believing that Cigna is so oversold, and with ESRX being a part of it now, this is going to be its bottom move up. But if it doesn't move up immediately, I'm not using two different stop levels. I just have one stop level right there on ESRX. But because it's a merger and acquisition stock, buyout stock, you avoid it. You don't play it. ACER is a perfect speculator ad signal. Pretty good looking chart, right? It's very thin. Look at the volume surge today. It's only 46,000 shares. Look at the stock. It's extended from its 20-day moving average, and the real body price bar is outside the 5, 10, and 20. You don't chase that. You don't take that. If you're a new trader, inexperienced trader, wanting to stay away from the risky trades, Acer's off. ERN, this is a perfect speculator stock. Once again, it's off. If you notice, BOP's going the wrong way here. I'm going to have some very tight initial stops, and plus, I've been watching ERN since this day. Every day it's in my perfect speculator scan, and I see it. It's finally rounding out here. Looks to have built a cup with handle pattern, so I want to get it here near the lows. But ERN, thin Amex stock. So guess what? If you're a new trader, inexperienced trader, not making a whole lot of money right now, want only perfect setups, you pass. Momo, this is probably the highest quality out of them all. This is a CanSlim and perfect speculator quality stock, but it's a recent earnings winner, and it's extended from its 5, 10, 20, and 50-day moving average, with the 50-day moving average below the downtrending 200-day moving average. Is everything lined up? No. So you maybe don't take it. ULH is probably the overall best signal of the evening because you have very low risk to the lows. You have the bullish hammer candle over candle pattern, the BOP and price surge to confirm. But once again, its average daily volume is only 30,000 shares. It's not like you can really load up a whole lot without moving the stock. So once again, if you trade ULH, you got to keep it small or you don't take it at all. And you got to obey those stops that I have. I mean, you just got to obey the stops. RIBT, another new long position? Absolutely not. Nobody should even consider this. Extremely thin, volatile, illiquid, thin, wide bid-ask spreads. So this one definitely needs to be avoided by everyone. But me, I'll take a signal. It's very measured moves by me. I get long at 148. If this thing hits 141, I'm out half. It hits 138, out all, and I'm moving my capital to the next best signal. Unless there is no signal, then there is no new signal. And then GBT, offering went well. They had a share offering, which already makes it risky. Means they need money, need to have share offerings to make money. But nice big reversal here. Still, I'm only going to be using this low. I don't know if I posted the other low. I hope I didn't, but if I did, ignore it. This is going to be your only stop level that you want to focus on. This low here or this low here. It fails this low or this low, you get all out at GBT. You don't mess around. But 1, 2, 3, 4, 5, 6, 7, 8. Yep, those are all the new limit or all the new long positions for Monday. And unfortunately, these are all great reward risk signals. Remember, I base all this based on the risk to that inherent loss level, those stop levels that I list, and all of the basic potential reward I'm looking for are those previous uptrends. So GBT, you can see, very large uptrend. RIBT, very large previous uptrend. ULH, very large previous uptrend. Momo, whenever it can have an uptrend, it can be very large. So this stock shows that it can move. All of these stocks show that they can move when they move, and that's why I take these signals based on these past previous measured moves that are quite large whenever they do happen. But if they don't work out, we cut our losses, we move on, we don't wait, and if we don't get our limit prices, we never ever chase. Hard rule 1, always cut your losses. Hard rule 2, never chase. Rinse and repeat, and in time, if you position size correctly, everything will work out. If you're having trouble with your position sizing, please let me know. I always recommend 10% in 10 positions, but I'm talking about quality positions, not extended positions, liquid positions. You start getting into the other kind of stocks, that's 20 stocks, 5% each. I wouldn't go more than 5% in any small cap stock. Mid cap to big cap, you can get up to 10% as long as you're using tight stops, and never, ever, ever risk more than 1% of your account capital per trade. And that means that if you want to put 5% of your account capital into a stock, but you do the math and see your limit order to the stop levels is a 3% loss, you now need to lessen your initial position into that stock to 3%, 2.5%, whatever it takes to get that capital at risk down to 1%. You do that in time, you'll be fine. All right, everyone, I'm going to end it here. I'll see you in the chat room on Monday. Aloha. Wait, first, before I go, there's 3 20% extremely overbought profit-taking signals, just so you know. RKDA, already been knocked out of all of it with my final profit target of 1140 getting hit before I could readjust it. USPH is an extremely overbought RSI 14 profit-taking signal, 20% signal, and so is ZG. There were no end-of-day sell signals in stocks moving lower. All right, everyone, see you in the chat room.